Bitcoin crashed from 122,000 to 83,000, a 33% drop in 3 weeks. Most people think that this made Bitcoin cheaper and easier to accumulate. Wrong. The crash made reaching 0.1 Bitcoin, the top 0.055% of humanity, impossible for 99% of people. During the crash, 3 things happened that locked retail out forever. In this video, I'll show the data that shows the 3 reasons why the crash separated the weak hands from the strong hands permanently. I'm Brandon from Green Candle. I've been in Bitcoin for nearly a decade and interviewed over 200 of the brightest minds in Bitcoin. If you want to know what actually happened during the crash, make sure you hit that subscribe button now. Now, let's get into the first reason. Reason 1, and this is what nobody's talking about. During the crash, the number of wallets holding 0.1 Bitcoin or more decreased, while the number of wallets holding 1,000 Bitcoin or more increased. Let me repeat that. Small holders with 0.1 Bitcoin or retail sold and dropped below the threshold. Whales with 1,000 or more Bitcoin institutions accumulated and increased their positions. This is the transfer happening in real time. When Bitcoin crashes 33% and gets cheaper, you'd expect more people to reach that 0.1 Bitcoin, but the opposite happened. People who are already at it or above 0.1 Bitcoin panic sold and dropped below the threshold. Out of 8 billion people, only 4.4 million or 0.055% have 0.1 Bitcoin or more. And during this crash, that number went down. But here's the critical part. While the wallets with 0.1 Bitcoin decreased, the wallets with 1,000 Bitcoin or more increased. Whales didn't sell. They bought. This is the wealth transfer. A retail holder with just over 0.1 Bitcoin panic sold, while a whale with 5,000 Bitcoin buys aggressively at the $82,000 to $95,000 range. And now they have well over that 1,000 coins. The crash didn't redistribute Bitcoin to more people. The crash concentrated Bitcoin into fewer hands. Small holders sold, whales accumulated. The number of 0.1 Bitcoin wallets went down, yet the number of wallets with 1,000 Bitcoin or more went up. That's reason number 1. Now, let me show you reason number 2. And this shows exactly where that Bitcoin went. Reason number 2, 30,000 Bitcoin disappeared from exchanges. During the crash from 115K to 82,000, 30,000 Bitcoin left exchanges. That's $2.5 billion moved to cold storage at the price of 82,000. So what this means is when Bitcoin leaves exchanges, long-term holders are accumulating and removing supply. When Bitcoin stays on exchanges, it's available for selling. So 30,000 Bitcoin is 300,000 people worth of that 0.1 Bitcoin position. So who was buying the Bitcoin that retail panic sold? The whales, whose wallet count increased from 1,000 plus Bitcoin. They bought every dip and immediately moved it off exchanges into cold storage. The Bitcoin sold by people who dropped below 0.1 Bitcoin went straight to whales who removed it from circulation. Available supply decreased by 300,000 potential 0.1 Bitcoin positions, and the supply you can access just got permanently smaller. That's reason number 2. Now let me show you reason number 3, and this one reveals who the biggest systematic buyer was. But first, if you're hearing all of this and you don't want to be one of those panic sellers who sold their 0.1 Bitcoin when you saw this dip, you don't have to, because Salt Lending lets you borrow against your Bitcoin without selling it. You keep your position and get the cash you need. With Salt, you could have borrowed against your 0.1 Bitcoin position and gotten the cash and still had your full position when Bitcoin recovered. So instead of selling your Bitcoin to whales, you can keep your Bitcoin instead of get shaken out. Green Candle listeners also get an exclusive offer at saltlending.com/green-candle or the link down in the description. They've also got some of the best rates in the industry, starting at 8.95% with a 12-month duration and a 70% LTV. No prepayment fees, no credit checks, and with these dips, you don't have to worry about potentially getting liquidated if you get the Salt Shield. So head on over to saltlending.com/green-candle today and get this exclusive offer for Green Candle listeners. Now, I know I told you at the beginning of this video that there's only 3 reasons, but after this one, I'm going to give you guys a bonus one. So make sure you stick around to the end of this video as I have one more reason following this one to give you guys. So for reason number 3, Michael Saylor has bought Bitcoin literally 45 out of the 52 weeks since Donald Trump has been elected. Literally in the 1 year since Donald Trump was elected in November 2024, Michael Saylor and MicroStrategy have bought 45 times. That's 87% of all weeks. During this crash, he bought at 95, 90, 85K, and 82K, MicroStrategy now holds over 640,000 Bitcoin off the market forever. This isn't trading. This is systematic supply removal. Every week, more Bitcoin disappears into MicroStrategy's treasury. Every week, the supply available to retail shrinks. So let's compare. Michael Saylor at 82,000, he's buying aggressively. Meanwhile, retail at 82,000, they're waiting. They're not buying. Saylor has bought 45 of the last 52 weeks. Meanwhile, retail is sitting on the sidelines. Saylor is one of those whales whose wallet increased from 1,000 Bitcoin to even more during this crash, while retail wallets with 0.1 Bitcoin decreased. Saylor's wallets increased. That's reason number 3. Now, if you want to stack Bitcoin in the background, you can help secure the network and get KYC-free Bitcoin in the easiest way possible. I even use it. Simple Mining lets you mine Bitcoin without equipment, noise, or electricity costs at your house. They handle everything: hosting, maintenance, repairs. You just get the KYC free sats delivered to your wallet while helping secure the Bitcoin network. So here's why that matters. Miners accumulate literally every single day, regardless of Bitcoin's price. Just like Michael Saylor buying 45 out of the last 52 weeks. Just like the whales who aggressively buy during these dips. While retail waits for the perfect price, miners stack sats every day. Green Candle listeners get 1 year of free repairs and a 7-day free trial if you guys head on over to simplemining.io/greencandle or the link in the description. Now let me show you for the 4th reason what happened inside the ETFs. Bitcoin ETF positions transferred from weak hands to strong hands. During the crash, Bitcoin ETFs had outflows. Paper hands panic sold their ETF shares, but here's what matters. When you sell an ETF share, you're selling your claim to the Bitcoin the ETF holds. Someone has to buy that claim. Who bought? BlackRock and long-term institutional holders. The Bitcoin never left the ETF. It just changed hands from weak to strong. ETFs hold over 1.5 million Bitcoin. ETFs currently hold over 1.5 million Bitcoin. During the crash, ownership transferred from retail to institutions within the ETF structure. This is worse than the outflows to exchanges. At least if Bitcoin went to exchanges, retail could buy it. When BlackRock absorbs your ETF positions, the Bitcoin stays locked in the ETF system forever. The supply got more concentrated, not more available. This is the same pattern as reason number 1. Retail ETF holders panic sold their positions. Institutional buyers absorbed those positions. Smaller holders decreased. Larger holders increased. That's the 4th reason. Now let me show you what this means going forward. And if this data is making sense to you guys, make sure you're hitting that subscribe button for me. During the crash from 122,000 to 82,000, 4 things happened. Wallets holding 0.1 Bitcoin or more decreased, while wallets holding 1,000 or more Bitcoin increased. Retail sold and whales accumulated. 2. 30,000 Bitcoin left Bitcoin exchanges, removed from circulation by those same whales. 3. Michael Saylor bought Bitcoin 45 out of the last 52 weeks, and he keeps accumulating. 4. ETF positions transferred from weak hands to BlackRock. 1 million plus Bitcoin is now locked up just in BlackRock's ETF alone. The crash didn't make getting 0.1 Bitcoin easier. It made it impossible. The supply got more concentrated. Out of 8 billion people, only 4.4 million people globally have more than 0.1 Bitcoin. The crash decreased that number. Whales with 1,000 plus Bitcoin increased their holdings. The test was conviction. Sailors passed, whales passed, institutions passed. Meanwhile, retail failed. Next crash will be the same. 0.1 plus Bitcoin wallets will decrease. 1,000 plus Bitcoin wallets will increase. Saylor will buy. Bitcoin will leave exchanges. BlackRock will absorb those ETF positions. You'll wait for lower. This is how the top 0.055% stay exclusive. Not by price, by conviction. So are you going to be the one that makes the change? For weekly data for what institutions do while retail panics, make sure you hit that subscribe button. The crash from 82K separates convictions from fear. Which side are you on? Thanks for watching, and make sure you tune into one of these 2 great videos I've got coming up for you. I'll see you guys at the next one.